Good afternoon. This is Mark Mentink with the market update for the week ending March 6th. Corn has been trading both sides this week without giving the market any real sense of direction. Even with today's announcement of sales totaling 445,000 metric tons to an unknown in Japan, which gave us a little boost, the optimism was short-lived. A lot of pressure from the equity markets and the fears associated with the coronavirus worldwide. The ethanol markets seem to have slowed down their grinding with the decrease in the price of crude oil and the lack of profits. South America's harvest has started and yields seem to be good, and with the value of their currency being down, it makes them a better marketplace to buy corn. Next week is the USDA supply and demand report, so we'll see if we're still holding on to the 1.9 billion bushel carryout. Soybeans also have been trading both sides this week, but have been unable to hold on to the upside of the 20-cent range, with May futures closing down lower for the week than they started. China has apparently lifted some of the tariffs on U.S. beans, but now it comes down to, are we competitive with Brazil with their new crop harvest? Pressure on this market, also from the equity markets and the coronavirus, are keeping the beans and the corn markets fairly range bound. We traded lower on a lack of any fresh news. Winter wheat that did get planted is starting to green up in the southern areas of the U.S., and the spring wheat farmers are waiting to see how the weather turns out for spring planting. Tariffs with China have been lifted on wheat, so now it's a matter of who's got the cheapest price. If you're still holding on to last year's wheat or the year before, you might want to unload it. The market is telling you to get rid of it. As always, have your orders in place so if the market does make a move, you're there to take advantage of it. Thanks for listening and have a great weekend.